Hello, Namaste. This is Neeraj here once again and welcome back to my channel. So what does the interest rate cut cycle mean for the market and for the economy in general for the world? So in this video, I would be discussing regarding the impending interest rate cut by US Fed and its impact on the market. But before starting this video, I would just request all of you to please subscribe to my channel, and you like this video, you please put a like and share it with your maximum friends, and also give a comment that what else would you like to listen from me regarding which more subject. And also there is a personalized consultancy which you can send me by mail and we can set it up. There is already in the market expectations is that the US Fed, which is the USA central bank and the world leader in setting their interest rates, is going to start the interest rate cuts starting from this June. And at least they are expecting that at least there will be 2 or 3 interest rate cuts before the end of this year of 25 bips each. And once US Fed starts, means generally it is followed by the other central banks like European Central Bank and the what do you call, the Chinese or the Asian central banks also, like in Japan, Indian. So in overall everybody starts, so US gives the indication and everybody else at least tries to follow that. So what I have observed, so I would like to discuss that about my observation or study or analysis, whatever you say, that I have observed in last 10 years is that whatever the US Fed generally, whenever they start a interest rate increase or interest rate cut cycle, so generally it goes, and when they stop that cycle, suppose so that the interest rate increase cycle has started in March 2021, this US Fed has started, right? And then they stopped it in say in July 2022 was the, sorry, in July 2023 was the last hike of 25 bips. And after that, since almost you can say that 9 months, there has not been the interest rate has remained steady. And that is what, if you follow this most of these other European central banks or say the Indian Reserve Bank also, you will see that this is the same kind of a pattern. Everybody, since last 9 months almost, there has not been any interest rate increase. It has remained steady. So the history suggests, what I have seen in the past is that US Fed generally keeps on hold the interest rate for 1 year. So that's why everybody is expecting that in June, when they will be meeting US Fed, they will announce at least one cut. It will start with the one interest rate cut of 25 bips each. This is why everybody is expecting. And if you see this other central banks also doing the same thing. But my observation has been that when contrary to all the people or the market expect is that whenever there is a interest rate steady or in rising interest rate, you will see the market has actually risen. Stock markets have actually gone up. So what is the meaning of that? Why it has gone up? It has gone up, this is my reading, is that it goes up because then people think that, oh, when you are increasing interest rate and still economy is doing well, means there is a lot of confidence in the economy to continue to do well despite the interest rate rise. Means there is so much of economic growth is happening that there is a capacity to absorb the increased interest rate also and deliver more growth. And that is why the stock market goes up. And contrary to the expectation of people is that when the interest rate cuts and the market will rise more, or the stock market is positive for the stock market. Actually what I have seen from in last 10 years, actually even in Indian market also, is that whatever the expectations of the rate cut is there, it is been factored in before the actual rate cut starts. So now the expectation is that in the June, US Fed will cut interest rate, and in India, it is expectation is that in April, when the Reserve Bank will meet, they may announce some kind of a softening or at least a steady. So in anticipation of that, you have already seen the market rally. But once the event happens, means once the interest rate cut has been announced or started, then you will see, this is what my observation is, that the market goes down. So over a period of time, when the interest rate goes down, means when the central bank cuts the interest rates, contrary to the normal expectation, actually market also goes down along with the interest rate cut. And with the interest rate rise or the interest rate remaining steady, the market goes up. This is what my observation, and this is what I wanted to share with all of you, is that that whatever has happened now is happening, the market rise, it seems to be the top of the market cycle. And now post interest rate cuts, actually you will see the market going down. So the best strategy is to liquidate your portfolio. This is what. So we are reaching near the market top, when the interest also has reached near the top, and now it will start going down, and market also will start going down. That is what my expectation is, or my analysis is. That's it from my side. Ciao from Neeraj from Moscow. Love you all.